Talk to me first about the cost-cutting plan. I mean, 11 beats is very impressive, but you obviously want to stick to that record and stick to raising your profits by cutting costs. How do you expect to do that?
Well, very good morning from my side, first and foremost, and thanks for having me. We have delivered another very solid quarter, and as you have seen, our revenues are up 4.8%, our net income 1% up, and we also have confirmed our guidance for the full year. And if you look at our entire markets, that means the megatrends that are driving our industries that we are serving, they are still in full swing and full intact, and we are extremely well positioned in all those markets, be it automotive, construction, but also appliance industries. We still see mid to long-term very good growth opportunities. And in this context, it is also important for us that we keep our costs under control to make sure that we keep leading market positions.
Markus, it's Naira in London. Good to speak to you this morning. Of course, there's some positive things coming through in your numbers as well. You would think the cost cutting would be positive too, but the share price down more than 1% now in today's session. Something is obviously unsettling investors. Could you reassure them in any way, perhaps, by saying that the cost cuts could come in earlier than 2021? I know that's the latest date, but would they be accelerated at all?
I think it is very important to see that the overall markets are currently in a very difficult situation. And in that context, the company is committed to create value for shareholders. Just to remind, we have just this year delivered already 1.5 billion euros back to our shareholders via share buyback programs. And I think also with 440 million in dividends that we have paid. And we have continued our very attractive dividend policy. So if you look at the overall positioning and also how we are creating value for our shareholders, I think we are on a very good track.
You are, I mean, if I pull up a chart of your stock since you started trading, you've done much better than the DAX index. You've done much better than parent company Bayer as well. Here's a chart going back to October of 2015. You can see Covestro shot up there. But you can't ignore the 40% drop we've seen this year to date, Markus. The stock is down 7 out of the last 7 trading sessions. I mean, what's going on that has investors concerned here?
I think it is very important to see that the entire markets are currently really seeing a very difficult time, and that also the DAX has gone down significantly in recent days. So from that perspective, I think it is an overall market environment that is currently not very favorable, and that's why we as a company also have made very clear that we have delivered, let's say, despite an increasingly difficult environment, another very solid quarter, and that we also have confirmed our guidance for the full year. If you look at our overall markets, we still see solid growth mid to long term above GDP, and we are very well positioned, having in all our 3 segments number 1 or number 2 positions globally, and we are about to also strengthen those positions, not only but also via large investment that we are going to do in the United States. We're investing in one of our key products, MDI, that is, for example, used in home fridges but also used in insulation for buildings, and that is exactly how we serve global megatrends. We must not forget that despite, let's say, the recent developments on the stock market, the megatrends that we are serving with our products are still intact. And this is climate change, this is, for example, energy efficient building, and that is, for example, also renewable energy. So these are all the growth drivers, and that's why mid to long term very positive about our growth opportunities in the market with a very strong position.
Yeah, Markus, you have mentioned a few times the sort of overall market conditions that are having an impact on your stock as well at the moment. So to that point, to what extent are you being impacted by a slowdown in automotive markets?
Well, we have an exposure to the automotive market of roughly 17%. In turn, that means that 83% of our revenue are generated outside the automotive market. So we have short-term seen that automotive is somewhat in a challenging time. But if you really try to see and listen to the tune behind all the noise that we're seeing, I still see that consumers want to buy cars. And in particular, I see that consumers want to buy cars with, for example, electric propulsion system. And that is exactly where, again, our materials play a very, very solid game in the entire market, because we continue to replace other materials to make cars more fuel efficient, also to have an opportunity to achieve the very stringent emission guidelines and regulations that are currently put into place. So again, our materials are very well positioned to master the challenges that all those industries have ahead of them, and we have a very wide spread in terms of regional exposure, but also in terms of industry exposure, and that's why I'm looking very carefully and assessing the situation each and every day. Yet on the other hand, as I said, we're also well positioned in every other industry and also in every other region.